Good morning.
Good morning.
How's Saturday going so far?
Oh, good. I've been on the meeting since 8.
Oh, really?
Yeah, so you know, always I like to get my fresh news.
Oh, yeah.
Hi, Greg.
Is he on mute?
Hello,
Can you hear us?
I can hear you.
Do you have like a good coffee?
I have a good coffee right here.
Well, I made Greg come on today, but he wanted a good coffee. I told him that all the coffees taste the same.
I know you.
So anyway, I'm not sure if there's anybody. Let's just wait a little bit and see if there's anybody coming on, and we're gonna get the show on the road.
Sounds good.
How's your baby, Matt?
She's doing great. She's getting to a fun age now.
Oh, good. I know.
Yeah, she's fun.
He's laughing a lot, huh?
Oh, yeah. She's laughing a lot. It's fun. Do you follow Heather at all on Instagram, my wife?
No.
Oh, she posts all the videos. You'll have to follow her.
Oh, okay. Yeah, we'll have to follow that. That's good. That's fun. Is she what, 6 months?
She's 5.5, coming up on 6. Yep.
Yeah, that's
Halloween
what
night.
I thought. That's what I
Yeah.
thought, because I remember it was around November.
Halloween night.
Yeah, that's awesome.
Yeah, it's fun.
They grow so fast,
Oh, I
right?
can't believe it. Everybody told me that, and you just don't believe it until you see it.
Yep.
It's
Yep.
crazy.
Let's just say, hold on, anybody? Well, we're going to be recording this session, so I got a few questions that came in on the email.
Perfect.
So we're going to address those, and then we're going to record this, so we're going to get to the people that couldn't be there here in the morning. So I'm getting better with my technology, actually. I connected hardwire today. And also I have a light right here, see?
Oh, nice.
See? I'm getting techy. So, but anyway, I would like to introduce Matt today. It's our special guest. And he's a lender, and so he's going to be able to address a lot of questions that we already have. And me myself, I really get confused about everything, and especially in the morning when you have a cup of coffee and started reading the news, and it's like overwhelming. And with the industry changing so fast, even, with the crazy forms that California Association of Realtors came in, since they, regarding coronavirus, those forms already changed 3 times. And it's so, everything is changing so quickly that we need to stay updated, and whatever we need to accommodate everybody. So Matt, I'm going to hand it off to you, and just tell us about yourself, and what is this crazy market doing, especially on the lending side?
Yeah, good question. So Matt Morrell, I'm with JMJ Financial. We're a direct lender down in South Orange County. And I've been in the mortgage industry for about 6 years now. Prior to that, I was a financial advisor out of college with Morgan Stanley Smith Barney, and also with Merrill Lynch. So, about a decade in the finance industry, just out of the Great Recession. So, the mortgage industry is going through a lot of changes right now. Credit is tightening. Lenders are changing their requirements and their guidelines to make it more strict to get a mortgage on certain products. We're seeing interest rates fluctuate day in and day out quite considerably. We were extremely low back in late February, early March. Then rates shot through the roof, kind of out of control. And now they're starting to come back down and stabilize again at certain price points and certain loan amounts. But needless to say, it's been quite a ride for the past 60 days. This market is hard, I think, for consumers because there's so much information out there. It's hard to know what to believe. It's hard to know if what you're seeing is accurate. As with any industry, it's going to attract a lot of really solid human beings that operate with integrity, and it's going to attract a lot of human beings that don't necessarily fall into that camp. So I think the message right now for a lot of consumers is, interest rates can still be really great. It can still be a really great time to buy, but you really need to be getting more than one opinion when you're looking for a mortgage. And you need to hopefully try to align yourself with somebody who's an advisor as opposed to a salesman. And a lot of that kind of comes down to your gut instinct. Unfortunately, it's hard to kind of tell, but you should be able to tell with how the person's approaching you and how they're handling you, and if they're trying to sell you and push you into something, or if they're truly have your best interest in mind. So always important to talk to multiple people and try to work with whoever you feel connected with and you think is going to take good care of you. That's more important now than it ever has been.
Hey, Matt, why do you think the interest rate fluctuating so much?
Well, there's a lot of reasons that we could dive into, but generally speaking, to keep it kind of simple for most people, the secondary market right now is really going through a lot of issues in the mortgage industry. So when people refinance their mortgage quickly, multiple times, the servicers, the people who collect the payment for the mortgage companies, they start to lose money. When they buy the mortgage to service it, they're paying the lender for the servicing rights, and it usually takes them 2 to 3 years to break even on that purchase. So if somebody's refinancing every 12 months, those servicers start to lose a lot of money. In addition to that, the servicers are losing a lot of money because the government has allowed consumers to go into forbearance right now. And we can chat about forbearance a little bit more, but essentially it's giving people the ability to skip payments right now for up to 3 months, and each servicer is a little bit different. But when the consumer skips a payment, the servicer is still required to pass along the payment to the bondholders, the people who invested. And so the servicing companies are really losing a lot of money right now because they still have to make the payments to the bondholders, but they're not getting the payments from the borrowers. And they don't have enough liquidity to handle all of the payments that are necessary with everybody going into forbearance. So, there's some fundamental issues kind of behind the scenes that isn't super straightforward, but that ultimately can impact mortgage rates because they need to pump the brakes so that people aren't refinancing every 12 months, every 6 months, and they need things to settle down a little bit. So that's kind of high level stuff right there.
So, this morning I was on this call, and they were talking about somebody says that they heard that their interest rate was still low for the remaining of the year and possibly like below 3%.
Yeah.
Is that something that you have a feeling and you think that's what's going to happen?
I do, yeah. So the general pulse right now in the market is that interest rates will remain low, and if anything, they'll head lower. Interest rates, in my opinion, can't rise, or else we're in trouble as a country. People won't be able to afford homes.
Right.
We are a country that functions on debt, and if the cost of servicing the debt goes up, we're in a lot of trouble in an already fragile economy, right? So
Right.
I think they're going to have to keep interest rates low, from my opinion. And I think if we're talking 3-5 years from now, 30-year fixed loans are probably in the 2% range, 2.5%, 3%, over the long run, right?
Wow.
And today, under the right circumstances, a really well-qualified buyer today or borrower with a loan amount under $510,000 is still going to get a really great rate in the low 3% range right now.
Right. Okay. So that would be a question. I know Craig asked me that question a month ago or so. Is it a good time to refinance? Is it a still good time to refinance?
It can be, right? So it depends is the short answer. I know it's never a fun answer for anybody to hear, but each person's situation is so different, and it's important to have somebody who can look at the full financial picture, review it with you, and truly advise you if it does make sense or not, and be willing to say, I've told multiple clients lately, hey, just hang tight and wait right now. I think that for your specific scenario, things will get a little bit better. And then I have other clients this past week where I told them, hey, now is the time to pull the trigger on this. So it's a political answer, and I don't like it, but it depends is the answer. For a lot of people, it does make sense, and for some, it doesn't.
Yeah, it's really depend on their individual case and what they're trying to accomplish.
Yep.
Remember last week I had my past client that was inquiring about those rates, no cost, no closing costs, and
Oh, yeah.
she's a nurse, she has a good job and everything, and she sent me a picture of this screen from the TV, and she says, I need to get this, and I'm looking for somebody that's gonna give me no cost loan. And so I said, just hang on tight and talk to Matt, because every situation is different.
Yeah, I think that, we get a lot of people that will quote a rate for them, and then they send us a picture of something that they saw online where it shows 2.5%.
Right. That was the case.
That was the case, yeah. So, 2.5% on a 30-year fix today is probably not happening, right? If it is, it's kind of a red flag. What I would probably remind people is that anything that you see visually from an ad is advertising or marketing, right? They're trying to get you to pick up the phone. They're trying to get you to call them, and it's effective, or else they wouldn't do it. And it doesn't mean that it's misleading. Perhaps there are some scenarios, probably very small percentage, that happen to fit into the quote that they're providing. But I can almost assure you, 9 times out of 10, when you call them and you give them your specifics for your scenario, the rate's going to be much different than what you're seeing on TV or on the computer. So it kind of goes back to what we started with today is, it's nothing negative against those companies. Perhaps they can and have the ability to offer a great option for you, but you're definitely going to want to get more than one quote. And I think it's also important, as consumers, because there's not a lot of education on how to shop for a mortgage, we really get caught up on just the interest rate. So we see 2.5% or 3%, and that's kind of all we think about. But there's more to comparing rates besides just the interest rate itself. And that's the cost of getting that rate, right? So maybe that lender is giving you a lower rate, but maybe they're charging you 2 or 3 points, thousands of dollars at the end of the day for that rate.
Right.
And that may or may not make sense, but you need somebody who's going to work through that with you and help you see what the numbers are telling you.
Right. I got a question emailed to me, and the question was, what can I do if I cannot pay the mortgage?
Yeah, that's a good question. So now,
so we're hearing about the forbearance or deferments, or what is the truth about that?
Yeah. The truth is you have to call your servicer. So, whether you own a home and you're paying a mortgage, or you rent and you're paying a landlord, communication is the biggest thing in all of this, right? Honesty and communication. So I would suggest that you call your servicer, you tell them what's going on. Right now, most servicers are offering some sort of forbearance. Now, you have to be careful and ask questions. It's not so simple as just skipping 3 mortgage payments and then you just start your mortgage again. Each servicer is different, but some of them are saying, hey, you can skip your mortgage for 3 months, but on the 4th month, everything that you just skipped is due today.
That's what
so if your mortgage is $3,000 a month, you have to pay $9,000 in the 4th month to make up for the 3 that you missed, right?
That's stupid.
So you have to be careful. Some of them are putting that balance onto the end of the loan, the back end of the loan. But none of it's being forgiven, right? That's the main thing. Like, it's not like you're skipping 3 payments and that money just goes away. We still owe that money. And it's important to talk to the servicer to understand, are they going to require that in 3 months? Or are they going to require it at the end of the loan? maybe even work with a mortgage advisor to help you understand what the servicer's telling you and maybe go over the paperwork with you.
So if somebody negotiates the forbearance or deferments, or does this has an effect on their credit? Just in case, for example, oh, in 4 months I wanted to refinance, but you had that forbearance for 3 months. Is that going to be negatively showing on your credit report, or
No.
it doesn't have an effect at all?
Nope, it's not supposed to be. Part of the CARE Act, I think is what they called it, that they passed. Part of that act said that the servicers are not allowed to report the forbearance to the credit bureaus. Now, having said that, if you're in forbearance, you cannot do a refinance during the time that you're in the forbearance. You have to get out of the forbearance, get caught up on your payments, and then you can refinance. But it won't affect your credit at all, from my understanding. But again, talk to your servicer, make sure that that's the case.
Okay. Before I go to the next question, do you guys have any questions? Craig, do you have any questions?
Yeah, well, we've already talked with Matt. Can you hear me?
Hi, yes.
Oh,
Yeah, and well, it wasn't me, it was my wife. She called up when we got your number from Kathy, and we were basically considering, maybe it was about a month ago or so, refinancing, and you gave us kind of a real quick quote and gave us some information, and then we talked to our financial person to see if it made sense, and it was certainly less than what we were paying now, but I think the rule of thumb that our financial person said that it usually doesn't make sense to refinance unless it's about a full % lower than your current rate. I don't know what your thoughts are on that, but that was his rule of thumb.
Yeah, so that's a really good question. And I've got a couple different answers for you. So again, without sounding too political, it depends. you have to think about it, right?
Good answer. Thank you.
If your mortgage balance, and I'm sorry, Mr. Smith, I'm forgetting the details, and we don't need to go over it on a public call, but if using some random scenarios, if your mortgage balance is $200,000, a quarter to 0.5% probably isn't going to make a whole lot of sense. If your mortgage balance is $800,000, 0.5% is going to make a big difference, right?
Yep.
So, Dave Ramsey, you may or may not be a fan of his. He has a general rule of thumb on how to determine if a refinance is worth it. And his rule of thumb is you take the cost of the refinance. Let's just say, to make the math easy, it's $3,000 to refinance. That's the cost of doing the refi. And you divide that by the amount of money that you're saving each month. Let's say it's $100. In that instance, you would have a 30-month break even on the cost of the refinance. So if you plan on staying in your house for longer than 30 months, it's likely going to make sense to consider the refi. If you plan on selling your house in the next year or two, that doesn't make any sense. You don't pay $3,000 to only save $100 for a year, right? You're not going to make back the $3,000. So, your financial advisor could be right for your specific scenario. I forget what the loan balance was, but the lower the loan balance, the more you're going to want to save on the interest rate to make it worthwhile for simplification.
Yeah, the way I was thinking of doing it, and we can talk more offline, was we've got 22 years left on this loan.
Yeah.
And so the thought for me was, if I kept my payment the same and paid it, and then refinanced, I think you did the math and said that I'd pay it off a couple years earlier and save, $90,000+ or some amount, which sounds really good over, but it's over 20 years. So, I mean, but anyhow, that's another way of doing it too, is if you refinance and then you make your loan 30 years again, you get to a point where you never pay off your loan, which used to be a little different in the tax days where you got credit for that, but in the current regime, really don't get credit for the interest you pay after a certain amount, right?
You're right. Yep.
That's why I was thinking it might make sense to just get rid of some interest. It's not giving me any tax benefit.
Yeah, very good point. And you're right about that, you know, and a lot of times when you refinance, you know, if you obviously if you're making your mortgage payment, you're making it on time, you're somewhat comfortable with your payment the way that it is right now. In a perfect world, whenever you refinance, you would keep making the payment that you're used to, right? Because otherwise, you're right, you would just keep resetting your 30 years. But if you do a refinance and you save $200 a month, and now you can take that $200 and apply it towards interest, or towards a principal, I'm sorry, each month, you're going to pay that loan off faster than the old loan you were in, and you're going to save a lot more interest over the life of the loan. So yeah, really, really great point there.
That's a good information. So everything is on a personal base case, you would say. So that's how the lending changed. So my last question would be, really, how do you feel? Is it a good time to buy? Or, you know, I can make a statement on that based on what I know as far as the sales. But as far as the lending, how do you feel about that? I mean, is it a good time for the first-time home buyer, for example, to get into a property?
I think so, yes. I think for the first time home buyer, yes. I think if your time horizon is long enough, yes. And Kathy, I'd love to hear your take on this too. But you know, if somebody were coming to me saying, "Hey, Matt, I want to flip a house right now," I
No.
would probably be a little hesitant, right?
Yeah.
But if they're coming to me and saying, "Hey, Matt, you know, I want to buy a house that my family and I can live in for the next 3 to 10 years. You know, we can really see ourselves living here for 5 to 10 years if we needed to," then I would say, listen, rates are at historic lows still, right? And I think property values are fairly priced. I don't think they're overpriced. I don't think they're underpriced. And yeah, I think it's a great time to buy. My wife and I just purchased a home 6 months ago, and I'm not having second questions about it. I don't doubt the decision. As a matter of fact, I feel really good about it. And my wife and I can see ourselves here for the next 10 years, and we're really excited. So I do, to answer your question, I think it's still a good time for first-time home buyers.
Yeah, and you know, it's like I would answer the same. It depends on your personal situation. Why you doing this? You know, if you're thinking, "Oh, I'm gonna buy now, in a couple of years I want to move," I don't know about that. But you know, it's like it's the same question when I get throughout, you know, the years. They always say, "Kathy, what is the best time to buy? Is it a good time to buy?" It's all depend. You know, is it a right time for you? And can you afford it? And are you going to be comfortable with it? So I think, you know, for me, it's just the home. It kind of gives me that peace and security. And I think for most people. So if your family needs a home, we can always make it work, but don't ever extend yourself. And I always call it, don't be married to your house. Because, you know, once you do that, it's like you don't have any money left to do anything else.
Yeah.
You know, and I would hate to see that. So last question, I had it here, I forgot. In the times like that some people struggling and they're kind of making choices what to pay and what to not pay, and you know, because they have limited income, how can they protect their credit score?
Oh man. I mean, that's a good question. I mean, the number one way to protect your credit score is to make your payments and to make them on time. If you don't have the ability to do that, your credit score is going to be impacted no matter what. But if you have to choose overpaying a certain debt over another debt, pay your installment loans for sure. So your mortgage, your car payment, lines of credit, your revolving debt, like your credit cards, would be the first one that I would put aside. But you know, if you're running into problems like that, man, yeah, I have empathy for people that are going through that right now. It's really not easy, and there's not really a good answer. Your credit's going to take a little bit of a hit, but look, it's more important to take care of your family and pay the things, keep your roof over your head, keep your electricity bills paid, right? If it's coming to things like that.
Okay. If people want to find the resources on forbearance and deferment, so the best is to call the servicer, right, of the loan.
There are specific servicers, so whoever sends them their mortgage statement each month, and a lot of these servicers have information on their website right now. If you call them, you're probably going to be on hold for a while. So maybe start with their website, take your time, read through the information that they've got up there. It's not something to take lightly and kind of breeze through, right? Like this is the biggest debt that you're obligated to. It's the roof over your head. So really be patient, take your time, and make sure that you're reading things thoroughly.
Okay. Any other questions? Do we have any other questions? Going once, going twice,
So
and we're done with the questions. So anyway, I just want to let know everybody really quick. I'm planning my first virtual buyer seminar for the first time home buyers. So I'm working on it. I just had that idea like 2 days ago. And it's just, but I already have a date. It's April 30th. So to get everybody ready right before we're going to be unlocked, I guess. And take opportunities and get in the house and but what would you like to do before May 15 or before whatever that date it's going to be? I think whoever is thinking about getting in the home, it would be great time now to kind of see your options, get pre-qualified, and kind of start the process, because what I think what's going to happen when actually people gonna start seeing the light in the end of the tunnel, I think there will be more inventory coming. I mean, in our particular area here, with the inventory still low, we don't have as many choices yet. But I kind of have a suspicion that there will be more inventory, more choices. So if anybody wants to get ready right before that time, that would be a great time to do that. So that's all I have for today.
Is there an open house later today? I thought you mentioned on one of your
Yes. Emails. Oh, I forgot.
Yeah, I thought you might want to mention that.
Oh, thank you.
But that's up to you. It's entirely up to you. You decide what you want to talk about. Your coffee.
Thank you, because I totally forgot to announce it again. Yes, I have my live open house, virtual open house today at noon. And this is going to be my first time going live. So awesome. I'm excited. I'm definitely stepping out of my comfort zone. So I'm going to figure it out next week how to connect the Zoom with Facebook. I don't know. I know there's a way, but I don't know yet how. But I will learn. So, but today it's going to be Facebook Live. If you guys want to tune in to the Kathy's Agent group, yeah, we're going to have live virtual open house. And the address is 9622 Bloomfield Avenue in Cypress. Perfect. All right, Craig, did I forget anything else?
Thanking everybody who joined today would be good.
Oh, well, come on. I even baked the cake, okay? It's a Polish apple cake.
Oh.
It's really good, but I wish I could give you a piece. I have enough for an army.
Oh, that's great. So on the way to your open house, virtually drive by my house and put it on the doorstep and ring the doorbell. That would be great.
Okay, I'll do that.
Okay.
I will wear my gloves.
Yeah.
Blue ones. All right. Thank you so much, you guys, for coming.
Bye,
and I will see you next Saturday. And yeah, mark your calendars for the buyer seminar, April 30th at 6 o'clock. So, but we will get more announcements for that. So happy Saturday and go and smile. It's a beautiful day. It was raining this morning. All right. Talk to you soon.
Bye.
Bye.
Where on you go?